There are countless indicators to follow. I've been watching hundreds very closely and reporting the best here. What remains unknown is what exactly will trigger the financial crisis part 2. There's no way to know for sure, but that really is besides the point. We have several yield curve inversions, a desperate central bank, massive holes in the economy, and so much deja vu it's feeling like a Hollywood movie, but nothing to worry about, right? You came here for the truth, so let me unveil that for you. Today we are going to look at several economic factors. I want to show you some of the details, and I wanted to begin with a little bit of Warren Buffett. In a new interview with the Oracle of Omaha, as he is called, Buffett on the economy, quote, "It looks like things have slowed down. Finally, the admissions come out." But an individual like this, you need to take what he says with a grain of salt very carefully, because obviously a person like this knows he actually affects the markets in some way. If Berkshire Hathaway owns corporations outright or potentially has a large presence within these companies, and then he starts to tell you that the economy is slowing down drastically, things are going to get worse over the next few years, he's only going to screw himself over. So he's never going to tell you when things are looking very bad for something that he owns or potentially might own. He's only going to give little tidbits of information. Oh yes, it's a little slower than what we had imagined it would be, but we think that next year is probably gonna grow faster. For now, just a little slowdown. And this way, if you're investing like a Warren Buffett with a buy and hold mentality, you're not gonna sell. Maybe you won't add so much to your positions, or maybe you might think now's the time to add as I go through this period. It might be a little up and down, but in the long term, I'll be good because Warren Buffett said so. Well, this is not a way to invest. If you copy what somebody like this does, you don't know what they're doing on the inside. Yes, you can look at their 13F of Berkshire Hathaway, but that is from the previous quarter. You don't know what he's doing up until now. You don't know really what's going on the inside behind the scenes, so it's never a good indicator to do that. Now, it's good to hear what he has to say. Obviously, it's interesting to see what he's holding, but you can't go into this level of whatever Warren Buffett owns, therefore it's good. Not a good idea. The U.S. economy finished the year on a softer note than previously estimated, and new data shows corporate profit growth stalled, pointing to weak momentum at the start of 2019. This is out of the Wall Street Journal. I just wanted to cover a few points from it. Essentially, what we are looking at is despite all the stimulus that's coming into the markets, it's not hitting the actual economy, and this is where I try to separate. There's an economy and there's a market. Whether we're looking at the bond markets, whether we're looking at the stock markets, I usually just say the market, but essentially what we have seen here is that China, US, ECB, and so on, they're all pumping it up right now, or they are starting to slow down on their quantitative tightening programs, like the US, for example. This has not been able to stimulate the actual economy. We have only seen progress in the stock markets for one. Corporate profit is a huge problem here, and something that's been going on for a little while, because all of the actions that they've been taking have been so monstrous, and yet they can't expand. Of course, this is just one piece of the puzzle. Let me show you what Reuters has to say about this. U.S. fourth quarter GDP revised down. GDP increased at a 2.2% annualized rate, according to the Commerce Department. That was down from 2.6% pace estimated in February. What's interesting about this is that with any of these numbers, there's always the initial amount that they put out there. That's the one that gets reported. That's the one that the stock market trades on, and then it gets revised. And every single time they're revised down. It's ridiculous the way that they change these numbers consistently. They know that by that time nobody cares. I'm reading you this information right here, but the mainstream media, even though that's where I'm getting it from, doesn't care. They are not going to make this information get out there on the front page for the average person to figure it out. The algorithms don't seem to care about it, and the financial media is not going to share it. They already covered it, considered to be old news at this point. The revisions, even though they're down, even though they show you a better look, not a real look, but a better look at what's happening, are still not going to show you the truth. So let's move on. I really do believe that this is very serious. Durable goods at wholesalers' inventories and sales in the billions on the right-hand side, inventory to sales ratio on the left. So it's very clear to me, we have inventories building up, not just in real estate, but we're also seeing this in durable goods at wholesalers. Look at this. We are seeing a continued trend of this building up. This chart goes from 2012 up until present day, and it gets bigger and bigger and bigger because these individual companies here, they're not receiving as many orders anymore, but they're still piling this all up in hopes that the economy will do better, but that's not happening. Then you have the sales. You can see, yes, they have gone up. There's no doubt about that. But as it's described right here, the ratio is crazy. We saw a similar pattern occurring in this time frame between 2015 and 2016. The economy almost collapsed, but then they introduced some stimulus globally. That was from the Federal Reserve, the Bank of England, I believe, around this time, and the Bank of Japan. It all happened to pump the stock markets up, and they were able to get around it. Always temporary measures, always band-aid fixes. Looking at this tells me that we have something to worry about with the inventories. I'm going to keep you updated on this as always. And now we get to the major story of the day, continuing jobless claims. We had witnessed this continuously declining over the years, and of course, we saw the mainstream media mentioning this. However, we just have something that they don't seem to cover recently, but I'm going to start to talk about it. We are seeing this now getting a little heavy. And the last time that we saw this, you could see it for yourself, it actually began in 2007. However, it really became a problem in 2008. This is what we need to pay attention to. It's the trend. It hasn't been doing this for 2 months, for 3 months. I'm going to show you right now, looking closer onto this data so you can see it for yourself. We started to have real problems around September where most stocks tended to peak out, and then things got really bad throughout October and beyond. This is also the case for this continuing jobless claims. As of October, they have been rising, getting worse and worse. Keep your eyes on this because this is going to be something that plays a role in the next recession. Continuing jobless claims year to date, it's looking like the worst, the absolute worst since the financial crisis. So what we're looking at here, it's kind of messy to see these type of charts, but we are seeing it as of the beginning of the year, and that goes back from 2010 up until 2019. And of course, we're only so far into it, but we'll see as of this moment though, it's the worst we have seen since the financial crisis. So all of them are looking fantastic over these years. We've been watching this, of course. The economy is growing, people are getting more jobs today, the unemployment rate is declining. You've heard all the mainstream noise. This tells us that something is very different in 2019. But it's weird because the stock market has basically recovered. Corporations are saying everything is just fine. We've heard some individuals like Warren Buffett, for instance, saying, yes, it's slower, but don't worry because things are going to get better. And ultimately, this is just one indicator. It's just one. It's not even one that I like to focus on at all, but new information came out. I wanted to bring it to you, and you have to use all the data, piece it all together, and then that's how you formulate your best guess. So as far as I'm concerned, the actual real economy isn't doing that well. We can see some factors that they bring out in the mainstream media that suggest things aren't apocalyptic. However, there is one thing that's looking very, very bad, and that is the actual amount of stores closing. That has an impact because people are going to lose their jobs. They already have been. 2019 is on pace to be worse than what we saw leading up to the financial crisis. It's probably going to surpass that. I've been covering this issue now for a little while, and this year I've done several videos about it because new information is popping up all the time. Another 150 people are being laid off. Yes, of course, it's a small percentage, but this is just something that I have been tracking. I wanted to show you this data. Just throw it in at the end of this video. If you want to see all of the stores that are closing right now in 2019, stay to the end of the video. I'll link to a video that will show you 5,600 stores that are closing. But the reason I mention this is simply because, yes, it's 150 people, Bed Bath & Beyond, but then you have Sears, then you have Shopko, then you have this and that and this and that. Add them all up and suddenly it starts to have a cascade or a snowball effect that impacts people that don't work at any of these retailers. You know, in that other video, which I'll reference at the end, I saw so many comments of individuals talking about the fact that, hey, you know what? These companies, they suck, they're horrible, good thing they close, and so on. If it's Sears, for example. Well, what about all the other stores that surround Sears? They're going to be impacted by this also, so you need to understand how that is all broken down, how it all works, and know that it will have an impact on the majority of people and the economy. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you are supporting this channel, so I do appreciate that very much. Last but not least, if you want the financial education you weren't taught in school, these two books have everything that you need. You can get all the details such as the foundation, history, asset classes, how to reduce your debt, how to reduce your expenses, and so on in these two books. Check them out at the link if you want the audiobook that's available at themoneygps.com. This video is booming. There are over 130,000 views the last time I checked it. 5,600 stores are already scheduled to close in 2019. We're only a few months in. This is getting big. Click on the video and I will see you there.